Hello and welcome to Markets via Deven Choksey, the daily market podcast where we decode the Indian financial markets. We start a fresh week and this morning the GIFT Nifty is trading higher, indicating a start in the green for the Indian markets. The Asian markets are trading higher, too ahead of China inflation data this week where Nikkei is up more than 1%. The US futures are slightly higher after cash market ended in the green. The S&P, Dow and Nasdaq did rise 1% each on Friday on stronger than expected jobs report. Dow posts worst week performance since March 2023 where S&P is down 1%. Talking about stock-specific, Tesla shares did rise around 3.8% in aftermarket on Friday as company gears to unveil robotaxi later this year. The US 10-year yield jumps to 4.4% on above estimate non-farm payroll data for March. And crude did fall at $90 a barrel on easing West Asia tensions, whereas the gold prices hover near record high and gains for the third straight week. So all in all, this is how the global setup for the markets look like during this start of the day. Let us now take a look at the trade setup for today. We are starting with a fresh week and the market is expected to be volatile in the coming session with focus on 22,550 to 22,600 area. The hurdle on the higher side as closing decisively above the same zone may take the Nifty 50 towards 22,800 and then 23,000 mark, while 22,300 to 22,200 is the key support zone for the index. On the 5th of April, that is the last trading session, the Sensex was up around 21 points to close at 74,248 after the Monetary Policy Committee maintained repo rate at 6.5% for 7th consecutive time, while the Nifty 50 fell and did close around 22,514 and formed bullish candlestick pattern with lower shadow on the daily charts indicating buying interest at lower levels. The Friday's trade indicated that the market seemed to have already discounted the RBI policy meeting outcome. The index gained around 0.84% for the week. The current consolidation is likely to continue in the range of 22,200 to 22,550 level for the next couple of days. A level of 22,300, as we clearly see, is something one needs to consider as an immediate support to watch out for the Nifty, while a bigger area of support zone stands at 22,150 to 22,200. On the higher side, the market could find the resistance at 22,600 to 22,800. And as we see below 22,200, the sentiment could change. So this is the flip side. The India VIX, which is the fear gauge, gained 1% after declining for previous 4 consecutive sessions, while for the week it was down around 11.65% to 11.34, the lowest level since November 2023. So this is how the picture of the market looked like in the last trading session and the last week as well. However, let's now take a look at the key support and resistance levels for both Nifty and Bank Nifty for today's trade. Nifty may face resistance at 22,524 followed by 22,561 and 22,603 levels. On the lower side, the index may take immediate support at 22,451 level followed by 22,425 and 22,383. For Bank Nifty in the last trading session, the Bank Nifty reacted positively to the outcome of RBI policy meeting outcome and rallied around 432 points to close at 48,493, continuing uptrend for third consecutive session with above average volume. The index is just 143 points away from its record high of 48,636 of December 28, 2023. During the week, the index has formed long bullish candlestick pattern on the weekly charts and gained around 2.9%. For the trend following traders now 47,800 and 47,500 would be the key support zone, while 49,000 to 49,300 could be important resistance areas for the traders. However, below 47,500 traders may prefer to exit for the trading long positions. Bank Nifty index may see resistance at 48,554, followed by 48,725 and 48,978. On the lower side, it is expected to take support at 48,062, followed by 47,905 and 47,652. So these are all the important support and resistance levels for both Nifty and Bank Nifty. Let us now take a look at the stocks in news. We start with Wipro. The Chief Executive Officer and Managing Director of the IT services company has resigned from his position on 6th of April. The software major has appointed Srinivas Pillai as the CEO and MD of the company. Keep an eye on Vodafone Idea as the telecom operator has received approval from the board of directors for fundraising up to 2,075 crore from Oriana Investments, an Aditya Birla Group entity. Tata Steel is another stock in focus as the Tata Group company said India's crude steel production grew by 4.5% on a year-on-year basis to 5.38 million tons, while deliveries increased by 5% year-on-year to 5.41 million tons and were the highest ever quarterly deliveries. Keep an eye on Gland Pharma as the generic injectable focused pharmaceutical company has received approval from the United States Food and Drug Administration US FDA for one of its injections. And last but not the least, we keep an eye on Cochin Shipyard as the company has signed the Master Shipyard Repair Agreement with United States Navy. The MSRA is a non-financial agreement and is effective from 5th April. This will facilitate repair of US naval vessels under Military Sea Lift Command in Cochin Shipyard. So these are all the important stocks in news. Let's quickly take a look at the FIs and DIs data. The foreign institutional investors net bought shares worth Rs 1,659 crores, while domestic institutional investors sold shares worth Rs 3,370 crores on the 5th of April. So all in all, this is how the picture for the market today looks like. However, one needs to consider that there's a lot of volatility seen in the market in the last few trading sessions, and we are starting with a fresh new week. Action will be seen, but again, one needs to not forget that there can be volatility seen as well. Nevertheless, irrespective of market conditions, research is the backbone of successful portfolio creation. Wealth creation is an art that we understand. We at Deven Choksey have our exclusive research services which are powerful and successful. To avail our exclusive research services, we invite you to join us. Just click on the link below and you are done. Fill in your basic details and our team will reach out to you. So don't wait any further and embark on a wealth building adventure together. Thank you and have a nice day.